Hi, I'm Derek Handley with Nova Home Loans.
And I'm Courtney Morehouse with your Kessel Real Estate, working together to find you the right home and the right loan.
This series of videos will address our most frequently asked questions. We hope these will help clear up any misconceptions you may have about financing and finding your new home.
If there are additional topics you would like to hear about, let us know in the comments.
Today's topic is earnest money. What is it? Why is it important? Can I lose it and when? How does it affect my cash to close? Earnest money is a deposit made to a seller showing the buyer's good faith in a real estate transaction. The amount of earnest money varies from transaction to transaction. The seller sets the amount of the earnest money, but you're not required to deliver that amount. You can give more or less when writing your offer. But be aware that sellers often gauge the strength of a prospective buyer on the amount of earnest money they've offered.
This is true, but sellers also need to keep in mind that they will likely not get to keep the earnest money. We'll explain why in a minute. Nowadays, most buyers will deliver the earnest money within a certain time frame after their offer is accepted, usually a few days. It is important to remember that the earnest money is deposited once it is delivered, so buyers need to make sure those funds are actually in the bank. The assigned earnest money holder, usually the title company, will cash their check and hold the funds until closing.
We hear a lot, my agent says, I'll always get my earnest money back. This is not true. Yes, a buyer can lose or forfeit the earnest money if specific dates and actions in the contract are not met. Most importantly, the loan commitment date. This is a date when your lender must have your loan approved, unless both parties agree to amend the date on the contract. Your lender should be providing you an estimated cash to close early in the process. This is a total amount including down payment, closing costs, and escrows that buyers must bring to the closing table. Items such as earnest money and appraisal fees are credited back to the borrower at closing, reducing the amount of buyers have to bring out of pocket.
Getting back to why a seller should not expect to keep the buyer's earnest money. The contract to buy and sell is very buyer friendly. There are over 20 different options for a buyer to terminate their contract and keep their earnest money depending on the contract terms, while a seller has about 5 different options to terminate depending on the contract terms. A buyer can lose their earnest money, but sellers should not expect it. It is so important to understand how the deadlines of your contract work, but that's a topic for another video.
Having the right realtor and right lender is imperative to ensure your offer to purchase is written correctly and all dates are met. This will put you in the best position to have your offer chosen by the seller and earnest money protected throughout the process. Thanks for joining us today. We hope this has been valuable.
If you have any additional questions or topics you would like us to review, reach out or leave a comment.
We'd love to hear from you.